Hi, welcome to the Market Alert for Tuesday, the 10th of November 2015. Starting off in the 5-minute chart, we saw the market moving lower during the first half of the session. That was the only time we had any volatility, and this giving 70 points profit in the 3 trades before the market then went into the quiet session. Now, as I've said before in the Market Alert, and also sent out emails in the last few weeks, that if there's no news, then the evening session is generally fairly quiet, and this is how it actually panned out. Actually giving 86 points loss through these trades, and then pulling up 44 points back in this, and then offsetting what you would have made in the first part. So, as I keep saying, if you've made money in the first part of the trading session, why sit around trying to make more in the second half? Because if you've had winning trades in the first part, the law of averages says there's likely to be some losers, and especially when there is no economic news or hasn't been any economic news. So that being the case, you see what happened here, and then the market moved higher, but you were given profits of 70 points plus in the first part of the trading session there. So always keep that in mind. Again, I'll keep banging on about this because it's important. If you've had winning trades in the first part of the session, you don't really want to trade the second part, especially if there is no economic news out or no FOMC member speaking. And of course, we've gone into that situation now, which I also mentioned yesterday. What is the market going to do now because of interest rates? That's the other thing as well. The market is waiting for the Fed to decide on whether they're going to raise rates or not. And I'll come to that in just a second. In the daily chart, we can see the market down yesterday, but on the overnight, starting to move back to the upside there. Again, they don't want this market to go down. But that said, it's trying to sort of second guess what the Fed are going to do is an interesting one, because they may actually move the market sharply to the downside. This will reduce the valuations of the stocks, and therefore allow them to say, well, the heat's come out of the market, so we don't need to increase interest rates, and then you'll see the market go back up. There are so many combinations of what they can do, and trying to second guess what the Federal Reserve is going to do is quite a difficult one. So as we go through the next few weeks, as you saw yesterday, the short side could actually become more favourable as the market waits for the Fed's decision on interest rates. So again, just keep that in mind as well. But as I've said, with regards to the short side as well, unless it starts to actually show its hand in a change in the daily chart where we see the trend broken, then they are sort of quick profits to the downside. And again, news-wise today, absolutely nothing after 1:30, so keep that in mind also. Tomorrow is Armistice Day as well, both in the UK and in the US. All government agencies closed, so no bond trading tomorrow. That could have an effect on the market, but more on that tomorrow as well. So again, today, if you get to the volatility in the first hour, which you generally do, then don't... and you've made profits, then don't bother with the evening session. Put your feet up and do something else. However, if the market's quiet in the first part of the session and there are no profits, then you will get them in the second half, which we saw on Friday, which because it wasn't quiet in the first half, it was a case of there was too much volatility. But those sort of 3 variables, so if it's profits in the first part of the session, forget the second half. If it's quiet in the first half, then you will get the movement in the second part. And then, like Friday, if from news items, if you get a lot of volatility, then you will get the trades in the second part. So again, just make a note of those. In the implied volatility, up sharply yesterday, 1362, which you would expect, and this can be seen in the chart there as the blue and yellow line have now crossed. So that's another reason for saying, watch out for potential moves to the downside as well, and a possible change in trend, reduce the valuations, give Yellen the excuse that she wants to actually increase rates. And here's an interesting thing for you. This is about the jobs figure on Friday, which everybody is staggered about, and it seems to be the main talking point in the business channels. All the talking heads are going on about it, but I love this comment here, as one witty observer noted over the weekend, no one with an IQ greater than their shoe size, save corrupt captured American economists, buys the fake October unemployment report. And I couldn't agree more. I mean, all of the figures are massaged these days just to, well, you can make figures do whatever you want them to do. I mean, it's as simple as that. But what's very interesting is that the jobs figures can be split into two, really. You've got the retail sector jobs and the construction jobs. And if we just have a look at these two charts, you'd think, well, they're absolutely and identically the same. Let me just enlarge this a bit. The difference is this is 2008 before the markets crashed, and this is the current picture, and it is absolutely staggering how the correlation between these two is exactly the same. And again, as in 2008, we got all of the mainstream, all of the feds and everybody saying, oh, there's no problem, the banking sector's fine, and so on and so forth. And then when it happened, they said, well, we didn't see it coming. And yet you can see here the pattern that we've got. This is the construction chart here as well. You can see exactly the same. We've got lumber prices disconnecting from the construction jobs, and again 2015 at the top, 2006-7 at the bottom, and then you see what happened thereafter. So a very interesting picture there. You won't see this on the mainstream TV, but it certainly paints a different picture to what the non-farm payroll figures were on Friday. So I thought I'd just share that one with you. But that's from Zero Hedge, where, in my opinion, you get the true picture of the economic news, unlike the mainstream, where you get the traditional economic view. We're not in a normal and traditional economic situation anymore. So if you want to have a look through the daily news that's coming out as far as the economy is concerned, Zero Hedge is your place. It's the best resource, because it gives it as it actually sees it, as opposed to the mainstream that sanitize it and pay people to come on and give their mainstream opinion of what's actually happening in the markets. Right, that's it for today. See you in tomorrow. Again, keep in mind what I said earlier about how the volatility is in the first part of the session and how to react to the second part, because there is no more news after 1:30 today, and no Federal Reserve people being wheeled out either, as far as I can see. If there is, I'll let you know later. Thanks for watching. See you in the next one.